analyze what I did. So I took out the first, like you said, I took out the first down and then up version.
Mm-hmm. Okay.
And then I analyzed all the low points. So the lowest point on the graph was this point that I marked, and it was at, let me close up what was it? It was right here, and that was at negative 5.36. So I wanted to find another high. I wanted to find the highest point that was gonna equal that, be equal or greater.
Good.
And the first point I found was 5.63 because this one before it was 5.3, so that didn't meet my mark. So I hit at 5.63, and that's when it was a little bit greater, and that's when it became eligible. Up at that green arrow, I don't know what happened. Eligible thing, but that's when the first time it became eligible. And then it went up, and it went up, and it went up, and boom, right here is my first reversal. And that's when we would have entered the trade, I believe.
Perfect. That was perfect. Now,
So that's what I got going right now. And then I tried to, for some reason, I tried to mark this stock as like a watch on my watch list, but it was my computer like wouldn't do it or something. I don't know why. But yeah, that's what I tried to take yesterday's lesson and put it to use. And then so that's when we would have entered. And so my question would be, I wanted to see how we would do this on the BBP calculator.
yeah, yeah.
So
So do you, why don't you bring the calculator up?
okay, let me go under here.
Very, very good what you just explained. Because that's the key to that method, PM200.
Okay, so here's the calculator. Okay, so the calculator's open. Oh, this is open. There you go. So I would go back to this, and so when I looked at it, so we would have. So my question would be, do you enter the price at the last price?
You enter the trade at the close on the reversal day. Did you get that?
So reversal. So in the box to the left, I would have entered the trade at 69.22.
Okay, let your mouse go.
Oh, sorry.
No, 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 it's okay. I just wanted to see here. I'm going to do something. I wanted to check something here. I'm blowing this up, and all I'm doing. Okay, you did good. You marked this white line. I assume you, yeah, you had to because I didn't. This white line is your designated entry. Is that right?
Yep.
Perfect. So you just said you would enter in at 69.22, and that is correct.
Okay, so you enter at the low, right? Correct.
At near the close, right near the close, like 12:59. So for explanation purposes, I would enter in at, you're correct, 69.22, which is the closing price of that day. So I'll let you keep on.
Enter at last. So if it's 69.22, then we would come back over here. And so it was going to be a bear trade, correct?
Exactly.
And then so before I can do that, we have to, and my mouse like freezes up. I don't know what to do. I have to zero out all these, correct?
You just have to zero that one out. That's all.
Just the market value?
Yeah. Zero it out. Don't delete it.
Okay, cool.
You
So,
do. Hold on. You hit backspace. You didn't hit zero. When I say zero it out, I mean hit zero.
okay.
So do Alt. There you go.
Cool. Now it's at 0.
Okay, good. So
Okay, so now, actually, I don't know why it won't let me do this over here. Won't let me get over there. It's weird. It won't let me like scroll to the right. Okay, here we go. Okay, so, excellent. So the stock price, when I go to the stock price and put 69.22.
yes, but not there. I'm kind of laughing because see, I haven't talked about that. What um
So you go to the entry right here.
hold on a minute. I'm gonna try something. Okay, something happened with your calculator because no. I'm gonna test something really quick. Hold on. Fill price, let's say is okay. I was wrong. I'm gonna do something on your calculator here. Okay. Now. Okay. What I'm doing here, I'm gonna keep this. This is a calculation by itself, is what I'm trying to separate. Now, when I say enter in the stock price, it's not here. Okay? You're correct that I know why you went there because I remember I told you everything in yellow is where you want to enter the stock price. But this is where you enter the actual price, okay? In this column here. Okay? Because this is like a calculator off to the side. These are doing additional like calculations in addition to your trade. And I'm glad you brought this up because it brought to my attention how this could be confusing. So what this is is basically if you just wanted to figure out outside of this calculator, okay? If you just on like it's in its own little world, put this little section would be like in its own little entity. And if you just really quickly wanted to figure out like based on your investment of $600 and the stock right, exactly. And that this is
like a little estimator, like a little
right. So what I'm going to do is make this like a little box. So its own little box. Okay. Now it's its own little black box there in case you want to do. It does two things. It does what I just explained. You can enter in the price, and based on how much money you have to invest, it'll tell you how many shares. And that's its own little world. But the other thing it does is if you had $100, okay, of course it'll adjust this, but also this number, it affects these numbers over here. Okay, so to continue on with the example, or to let you continue on, what I'm just going to tell you for sure is that you're right on the money so far. Okay, you're correct in how you're entering. It's just that you need to enter in the price over here, not here. You got to enter in the price to finish filling out this spreadsheet as far as the number of shares to buy. So let's go back and you probably have a good memory. I already forgot, man. I was trying to figure out what the closing price. No, I think that was me. That was me.
So yeah, it was. Let's see, we're at 69.22, the last price.
Okay.
So that would enter that here, right?
Yes. Yes.
69.22, and then we would put how many we want.
Yeah, I'm laughing at that 1.4444. We just want a whole number, all right? So that's what we want there, is a whole number. So yeah, in our example, if we had $100 to invest, we could buy one share because it's $69.22 per share. If we went over here and said, we got
1,000. Let's hit 1,000.
Okay. You can hit 1,000.
Let's put 1,000.
All right. Now we're gonna buy. Now go ahead. Go ahead. I don't want to cut you off. You're doing fine.
Okay, so now, so the activity date is Friday, 1/20. And then so after this, where are we going to go to our? Honestly, not sure.
No, you're doing good.
I know you want 1%.
Right. 1% based off. No, I don't want to say anything. I'll let you keep going. I don't want to give you the answers. This is where you got to start knowing the answers. I'll ask you the questions. So the other thing I would do, and it's just being consistent. 120. So today's the 20th. I like entering the date like this. Okay, I like the slashes. I like the slashes on that. It makes it. It's just as far as consistency is concerned. The only other thing I would put in is the commission. Okay. All right.
Oh, that's right, because we're using investors. I forgot what they're called. Interactive
Brokers, right?
Interactive brokers. Correct.
So you're going to pay a commission. It doesn't matter if you're doing a trade with Merrill Lynch, that would probably be a $25 commission because they're a full service broker. They're probably one of the most expensive to try to trade with. But anyway, that's why I go with Interactive Brokers, because they're a deep discount broker and very, very inexpensive commissions. So the other thing, let's see here. Next question I'm going to have for you is what else do you need to do at this point? If that's your trade, and the next logical step is you enter it into your platform. Okay, so now let's pretend that you entered the trade in the on your trading platform, Interactive Brokers, and you got that exact trade. You shorted 14 shares. Now pay close attention to terminology. You shorted 14 shares at the price of $69.22. What's the very next critical thing to do?
It would be put in your limit order.
Excellent. You should put 3 exclamation points on your notes right now. That, I can't tell you, is important. That one thing has to do with my next talk when the next time we meet, and that has to do with eliminating human error. That if you don't do that, that's purely your fault.
Yeah.
That's lack of discipline, and it's a lack of focus. And this may be a really good time, but don't forget that thought. We need to enter a limit order. But on the very bottom, I have a pre-flight checklist. This is, like these are all the things you need to go through before you make the trade. I call it a pre-flight checklist. Okay. After entry and during the trade, I have another list of things that you need to look out for. Okay. Put your trade plan on the chart so you know at all times where you stand. Know where your profit point is at all times. Keep DCA limit orders up to date. This is very, very important. Cancel old good to cancel orders and or update. I haven't even talked about this one yet, but this is on my after entry and during the trade. So it's this little checklist. At all times have profit limit order and DCA limit order as needed. If you're using the Bull Bear Profit Concept Calculator, keep the calculator up to date at all times. Okay. Update the notes section on the chart, which is part of the trade. And I'm referring to the notes section. I'm referring to right here if you had a note on the chart. Okay. Hold on here. Okay, an example plan on the chart. This is just, well, it's an example of a trade plan on the chart here. Okay. But then post analysis. This is what you do after the trade. Post analysis is a must to become a better trader. Mistakes create breakthroughs and insights to improve trade strategy and or methods. So I did this for years because I wanted to absolutely know where I was at, what I was doing working, And then I use this thing called a SWOT analysis. This is commonly used in business, by the way. What are my strengths, weaknesses, opportunities, and threats? The most important thing to me was weakness. Once I knew there was a flaw in my plan, my whole all-out focus would be how do I eliminate that weakness to turn it into a strength. That's how you get better on everything. Anything in life, I use that. So that's real critical. And then the exit chart. Okay. This is where I would post at the very end of the trade when it's done and over. I would basically take a picture of the chart and copy it right here. That way, if it's December 2017 and I'm going, what the heck happened with that trade I did on Woodward? I wanted to see like my progress. What was I thinking? All these notes, I literally would copy. I would copy this entire chart. And then I would paste it right here. And that gives you everything. It tells you the trade. It tells you all your statistics. Once this trade up here closes, all this information here, this information will be transferred down here. This section here I mentioned a while ago is where all your closed trades will end up. Okay? And then once that's done, all your statistics are right in these 4 blue boxes. Boxes 1 through 4 are the closed trade section. So you have 3 sections. Actually, you have 5 sections. This is not mandatory, but I'll explain that when we have a session just on the calculator. Okay. Um, I don't want to get too off track, but I wanted to drive the point home about what you need to do since you're kind of in a learning phase. You are in a learning phase. Keep track. If you don't forget, then after entry, check your what you're doing. Put your trade on your chart. Know where your profit point is at all times. Keep In fact, what I'm going to do here is add some information right now to your chart. So go through this basically list of what to check for after you've ended the trade and during the trade. So I think I drove that point home here. So we're going to head back here and we're going to resume to entering in your limit order. So you can pick up at this point.
I honestly forgot where to put the limit order in at.
Okay.
Is it the live price, or is it your desired break-even spot?
Yeah. Well, this is a brand new trade, so we're not even thinking breaking even. We're thinking about making our what percent?
1%.
Yeah, 1%. So if we come to a point that you're going, I'm not sure, I don't remember, I want to ask you to write it down, okay? That way, literally, physically writing it down, I think it'll help you remember the stuff that you don't remember right now. It's kind of a learning tool. So I'm going to tell you what it is. Our limit order is 1% of the closing price on the day you entered the trade. Okay? You got that?
I'm writing it down now. Limit order 1% of the closing price.
On the date.
On entry day, yeah.
Right. So do you know how to do that?
Go back up to the top, I believe.
Exactly. You're doing good.
And then our entry is not $1. It's $69.22. And our desired target is 1%. And so we would close at, once it hits 68.53, we are at our mark.
That's exactly perfect. That's exactly right. So in this situation, you're right. Our closer was 69.22. We can go up there, enter in like you just did, 69.22, and you put in the desired profit target, and you said 1%. So it is a short. That's why it's at $68.53. So $68.53 is 1% below $69.22. So, following along with that, what would you do with that information?
You would then go back, once you go back to your graph, and you would create your list. But we don't have those, right? I don't believe.
You would do what?
You come back over here, and once you write your entry, or would you come back over here?
What's more important than that?
What's that?
What is more important than entering in that on your trade plan? You're right, you're going to eventually do that, but there's something way, way more important than that. You're on the right track. You're on the right track.
Entering your live price?
Yeah, entering in on the trade platform, okay? Going in and entering it on your platform, because think about it. Logically think about this, right? Number one, you entered your trade. That was all done correctly. You entered in the right shares based on a $1,000 investment. You entered in 14. You shorted. By the way, on the platform, you would select sell. That's equivalent to shorting, is when it says sell 14 shares. Then you entered it and the trade executed, meaning you now have a live trade. It's live. Then you come back over to the calculator and you entered in correctly your entry of 69.22, and then it calculated out a $68.53 target. Go back to your platform, Interactive Brokers platform, and enter in, you're going to buy, okay? Terminology is very important. Now you're going to buy 14 shares at $68.53. That's literally what you would set up on the platform. Okay? So
why are you buying the shares now instead of selling the shares?
Perfect question. Because you're shorting. What happens is when you short, you're borrowing shares. I don't get caught up into going, what are you talking about borrowing shares? Don't worry about that. Just remember, and you should write this down, when you short a trade, when you enter a trade to short, you have to buy shares to exit the trade, to close the trade. You have to buy shares back. Okay? That is so important, because if you short a trade and on the platform it'll say sell. Okay? If you sell more shares, you're adding to your position. You know what I mean? You're making.
Oh, that makes sense. That's like what that guy on
exactly.
the market did.
He was
shorting it, so he sold shares and then he sold again.
Yes, triple yes. And if you did that, stupid thing here. Dang it, I don't know if you're seeing it. Anyway.
I've not seen anything.
Yeah, I had this stupid pop-up on my screen. But anyway, let's see here. Okay. So back to the point is, you're right. That guy shorted, then he shorted again, and then he got nailed. So, like I said, what I wanted you to write down is when you short when you're entering a trade to short because we expect the price to go down, the way you get out of that trade is you buy shares. You buy the exact same shares. So the limit order on this trade would be to buy back 14 shares at $68.53. And when the price drops to 68.53, 68.52, your order will get filled and the trade will close and you'll get your profit. Okay? So hopefully you're writing that down. Now, the other side of trading is being a bull trader. So that would be on the left side. Of course, that's this side I'm highlighting. This is if you were doing the opposite and you were expecting price to go up, okay, then you would enter in whatever 69.22, and then it would calculate out for an investment of $1,000. It would calculate out 14 shares. Okay. And then so that way you would enter the trade in. You would enter the trade at 69.22. You would buy 14 shares, and then that trade would execute, and you're going long. To get out of the trade, you would enter in your limit order.
Right.
Yes, you exactly. You would sell 14 shares at a limit price higher than 69.22 because you're going long. That is a thing I would circle because I've done that mistake. I've I've went long and I actually entered in my limit order to buy more shares at a certain higher price, which was like 1%, 1.5%. It hit that price and I bought more shares. And I went, that's human error. That, you just have to swallow your pride because you're going to, because you made a mistake, period. And just get out of the trade. Just get out of the trade. And what I usually, when I've done that mistake, I usually realize it pretty instantly because all of a sudden I went from 14 shares to 28 shares. What I'll do is go right back in literally seconds later and I will sell 14 shares because I made a mistake. I'll sell 14 shares. And you're going to take a little loss, maybe hopefully no more than $5, maybe $2, $3, depends on how many shares you're trading. But who cares? It's worth it. You made a mistake, suck it up. It's a $5 lesson you just had. Okay? It's all about making sure. And then I'll go in and correctly enter in the limit order. And then at the limit order, like you said, it would be to sell 14 shares at whatever, $70 and some cents, whatever that 1% is, 69 cents. So that's a very important lesson. Okay? Now, do you have any other questions? Or, I mean, so far on this?
This is good.
Yeah, this is extremely important. This is the nitty gritty. This is part of my next week. We're going to cover, what's kind of a good segue here. I'm going to switch sides right now.
So that was honestly a pretty good looking spot that I had actually gotten to practice on this morning.
Yeah.
I had a good up and down, and then I had just a pretty solid, like, easy layout on it.
Yeah, that was a good one to learn from. And you learned a lot more. I mean, the really fun part to me about stock trading, you never know where the road's going to take you many days, and you're going to learn something brand new. You perpetually are going to learn something new. I mean, there's this thing, constant and never-ending improvement. I live by that. That's how I think how I've been able to better improve over time, over years, is constantly learning something new. And we just went through that example. You know, I just wanted to answer your question that you had about, did you enter at the right time at the right price? But in going through that, it brought something up that I didn't even know we were going to cover, which is critical. Is entering in the right trade, learning the right terminology, and take your time. Don't rush through the trade. Just that comes with practice, and you'll get there with a simulator. So, do you see my screen?
I do not.
You don't? Really?
Yeah, I don't.
What do you see?
Oh, now I see it. Now it pops up. Okay, there you go.
Oh, yeah. Okay. So,
you got, live session with the intangibles, how to keep your money.
This is session 3. We're going to cover this section next week. Okay? I just wanted to show you what's coming up. This is, as far as formal, what I need you to know at a bare minimum is 3 sessions. These 3 sessions are more important than anything to me. What we've been covering this week is session 2. Okay? And then of course session 1, you know, is what we covered. I think it was last week. Yeah, last week we went through this. So with that in mind, let me show you something really kind of cool here. Can we switch back to your computer?
What's that?
Let's switch back to your computer. So at the top of Team Viewer, you know, I think it's communicate and then switch sides.
Oh yeah. Oh.
You did it. That's good. All right, so I'm going to take over your session here. So this is what I wanted to show you as a cool little surprise for you. Okay, you're familiar with this. Dang it, dang it, dang it, don't do that. Ah. You watching?
Yes.
M Walsh. This is a page for you. This page is for the exclusive use of Michael Walsh. All content is property of Bull Bear Profit and is strictly prohibited from being distributed in any format. So I've got that there, and this is what I was up late doing. So check this out. Session 1, Session 2, Session 3. This way, I got to redo the video for Session 1. It just didn't come out right, but I got to redo that, work on that this weekend. Session 2, which was this week, it has videos, okay, of what we covered. So your videos are right there. You have stuff that you can reference. So let's say you got video 2. All right, so go ahead and tell me just if this qualifies for the PM200 D3 trade. So isn't that cool? You can reference now what we went through, man.
That's pretty.
Yeah, I like that, man. It was a long day yesterday because I had to. Long story short is the website. I had to upgrade some things so that I could edit it, and I was thinking, what's the cleanest format to show you how to have your own page? You can reference that. You can play your videos. I'll add content as we keep moving. So in session 3, you just click on the session and it blows it up. Session 202 with Mike Walsh. So I'll add more content, like I said, as appropriate. Additional content will be added as appropriate. So if I have something good or something I need to put up there, it's your own page you can go to and reference. So I think this is pretty clean. It's pretty straightforward. You just hit the plus, obviously, and it'll expand out.
Yeah, it's really clean, especially like it just helps you like keep. It's almost like just helping you keep like an organizer, almost like a folder.
Yeah.
So you don't have to be all over your computer trying to find like what lesson was which.
Right.
Where do I find the information?
Yeah.
And it's kind of cool. It'll show like my progress as well.
Yeah.
And how far I'm going to come from each session.
Yeah. And you could do this, you know, it's obviously 24 hours a day. So, you know, the questions we went through today, they're being recorded, and the questions and answers. So you can go through that and just keep your head clean and repeat. Remember when session 1, I talked about repetition's the mother of skill. Repetition's the mother of skill. You have to keep going through it, and that's why I really want you to go through the graphs, go through the graphs, go through the graphs, go through the graphs. You know, when you do it enough and you have enough curiosity, you may come up with your own ideas and just and using your own common sense and logic and going, well, you know, if the whole thing is based on emotion, what else could work with emotion? You know, what else? What other possibilities are there? And that's when it becomes really fun. Is that if you discover your own possible strategy that may work. So that page obviously is live, and you can reference it whenever you want. Okay. Um, so let's see here.
We just might as well just like star this page right off the bat.
Good. Good.
Cool. Start. Excellent. Okay, we go.
Did you? Are you sure you saved it right? Hold on, man. Oh, there it is. That's it.
Yeah, that's right. Yep.
Okay. Okay. All right. So. Okay. So I'm gonna blow this up here, and I wanted to show you this graph real quick. Drive the point home. Okay. Take a look at the graph and tell me if this makes sense to you. And this is an example of the PM200 D3 trade. So look at it. Yeah.
Oh yeah, we've been going long in this trade.
Do you? It's going to be. Yeah. Can you hear me?
Yeah.
All right. We're going long, and it's
yeah,
it's
for 1%.
Right. So I just wanted you just to take a look at this. This is a really clean example. Now, what I'm going to show you right now is something I haven't talked about, but this is knowing the fine points of when there's a PM200 good trade to get into and when there's a PM200 bad trade to get into. So what I want to refer to is over here, right here. Pay close attention. There's these little subtleties that can make the difference of getting in here and the stock continuing to go up right after you entered in a short. The subtleties I'm talking about is, and you know, let me just say this much. So we got 200. You know, we're trying to get 200% from this point. So we go down. You see my mouse going down?
No, I can't see your mouse at all, actually.
Really? Huh.
Yeah.
Well, dang it, that's not good. Hold on. I'll go to a live part where hopefully you can see the graph, right? PKI. Do you see it?
Yeah, this we're on an example of PM200 D3 powder roll trade.
Right.
PKI.
And but you can't.
High peak entry reversal.
Right. But you can't see my mouse? Okay. Okay. So let me. It's weird. Wow. All right. I'm not going to worry about it. Let me go to 2016 February. 2016 February. Hold on here. Okay, yeah, February 2016. So, all right, this. Can you see my? Now you can see my crosshairs, right?
Yeah.
Okay. This is the point I wanted to drive home. These are the subtleties that are really important, okay? See how this is coming up here? And it's kind of going up, up. It's jumping kind of symmetrically. This is kind of, when I say symmetrically, it's like very orderly. That jumped up a certain amount. That jumped up similar to that amount. Okay. Sometimes, and let's pretend this was a reversal. If it's too smooth, don't use it. Don't use it. It's kind of like a fake out. It'll have a reversal, and then see how this, in fact, this is proving my point. This comes up, it had a reversal here, and if you entered that day, look at this, the trade went up, and it went up, and it went up. You still there, Michael?
Yeah.
Okay. And it went up. Okay. You would have eventually, broken even, probably right over here. And definitely over here. But you're in that trade for over a month. I don't like to be in trades over a month. Okay? Now, compare this, what I just explained, how it's nice and symmetrical, to this. Boom, boom, and then kabam! It just slammed down. And then it slammed down again. Okay? This is where, and I'm going to show you exactly, this was 200%. So I'm going to come over here to a different board. I'm going to go to board 5 where there's nothing written. And I'm going to bring it on down to here. That went 196%. Would this become a candidate? This is my question for you. Would this become a candidate if my crosshairs were today? Would you add this to your stock list?
No, because it's not at 200%.
Perfect answer. Perfect answer. Now, how about now?
Yep, it surpassed.
Yeah, exactly. It went 208%. Now I would add this to my checklist. Now let's
this would be a watch list. And then once it hits the reversal is when you enter the trade.
Yep. So when's the next, literally what day of the week would I be paying attention?
You would be paying attention on, so Friday, Monday. So you'd be Wednesday, I believe.
Where'd you
cut? Or is it Tuesday? You're on Tuesday. You'd be looking at this trade on Tuesday.
Correct. I'm like,
so Friday, and then skip the weekend, Monday, and then Tuesday would be the third.
Exactly. So if we went to that next bar, you're right. There's Tuesday. Look, you see the data box?
Yep.
Yeah, you're exactly right. So I would enter this trade at $45.67. because that's at the close. I already know you know that.
Wait,
Okay.
wait, isn't the so that close the top?
Yeah,
Not gonna
see,
be the
it
okay, the close because it's a little bit different than the free one.
exactly. That's how come I was giving you some wrong numbers the other day, because that number, the close is at the bottom. On the paid one, it's at the top.
Yeah, so it's a little bit different.
Yeah. So 45.67. So if we enter at 45.67, look what it did. All it did was go up. Perfect. It went up 2.85% within 3 days, and we would have been out of that trade at our profit and moved on. My whole point is I like things that are not symmetrical, because there's more volatility. Volatility means there's a bigger chance of this of on any particular day the stock going up and down. I love volatility because we only want 1%, so that makes us have an excellent chance of making our target. So this isn't bad. If there was a big gap here, I wouldn't have traded it though. Okay. Let me see here. I'm bringing this up. I have a whole watch list of stocks. Like this, see this gap? That's what I'm referring to. That's what I'm referring to. I don't like stocks with gaps. Okay, so there's that. All right, so I think I drove the point home as far as I went over to the live graph so that you could see the crosshairs. That's the only reason I went to the live graph, because you can't see them on this one, on this Word doc. And you could see where I marked it, where we got in, and the bull profited. Right there, it jumped up, and I showed you that on the other chart. Yeah, yeah.
You easily hit the 1.5%.
Right.
Or 1%.
Right. And this is the very last page of the Word doc, and it was just an example of what pivots look like. There's a bearish pivot is when the stock reverses down. The bullish pivot is when the stock starts to go up, right here. A pivot is defined by 3 points, 3 highs or 3 lows of a stock. Here there's 3 highs. The bearish pivot, I'm looking at this box right now. I'm moving it around.
Right, that was like the example of my example today where it went down. It was going to be a bear trade.
Yeah. I know you understand pivots, but anyway, this is just a little reference there for you. All right. So I marked, this was my biggest line right here at 4.2. That was weird. 4.2K. Okay. 4.2K. This was my next biggest line here. 4.1K. So 4.2K is the big line. That's exactly 4.2K is where I moved the red horizontal line. Then the biggest blue line over here looks to be about 40. Yeah, it's 40. So I make sure this line is at 40. There, it's at 40 now. I just bumped it up one notch there. Okay. Then I went ahead and I found this running my algorithm to find stocks that are breaking, that are both skyrocketing simultaneously. So today, obviously, this pink line and the blue line, they both simultaneously broke red on this day. This was close, but no cigar. This went 4.1K. I wanted to go at least 4.2K. So I disregarded this day. This was an entry for me. So here's my trade plan. I entered at 395 on today, and 1% is 3.9. No, I take that back. Okay. I'm laughing at myself because honestly this wasn't the best trade to take. It's a good trade to take technically, but I'm not going to make hardly anything on this trade. I already know it, and this is why. This trade, see, this is interesting. When I traded it, it showed it closing at $4. At $4. At $4, my good to cancel profit would be at $3.95 or $3.94. Let me show you what I mean. I'll go to my actual trade. NTIP. Okay. And then here, so on this trade, I entered at $3.95 and I actually shorted 300 shares. Then, and to bring this all around and answer your original question, I copied my trade, my actual trade, on down here. Okay. Right here. This was the trade. $1.56 was the commission, put in today's date. My trade was at $3.95. Shorted my 300 shares. Now what I was just talking about, what was interesting is at the close, it told me the close was $4. But it's interesting that I'm looking at it with you now, and now it's telling me the close was $3.95. That's a big difference. That's a 1% difference. Just that nickel difference is 1%. So what I'm going to have to go back and do, actually I think I already, well, what I'm just going to go back and do is, in reality, okay, if this is $3.95, our target would be $3.89 for a 1.5% target. Okay, this right here, what I'm moving around, is my limit order, and I actually put in a limit order of $3.90. So I am going to, remember earlier we talked about terminology. I shorted, in other words, I sold 300 shares at $3.95. So to get out of a short, I'm going to buy, my limit order is to buy 300 shares at $3.90. Okay, and that's good till canceled. So I went very extensive into this, what I did today, but I wanted to drive the point home about terminology, entering in the correct order. Okay, and also I think you wanted to see the actual trade, which I showed you earlier. So did you get what you needed information wise?
Yeah.
Okay. So what I want you to do this weekend here is a couple of things. Look at your web page and tell me what else you need that will help you. I want you to be on a fast track here. I want you to learn, and the only way you can do that is repetition, repetition, repetition. So on your computer, get the practice of bringing up a number of stocks to test. It could be random. Like for example, I could put in with a little easy scan for, and you don't have to do exactly what I'm showing you. I'm just bringing up a random watch list here. Okay. And literally on your platform, you can create whatever watch list you want or use the existing watch list that it already has, which is on your platform. It's on the upper left side of your platform. You'll see there's already a watch list up there. I don't know what it's for, but there's a watch list. What I want you to do is, that's funny that it has Apple for this particular watch list. And what I want you to do, you won't have the purple, you'll just have, of course, the blue. And just go through and practice picking up different, just picking up the PM200 method and notice the difference. Start to hone your skills and notice the difference when things are really smooth or jagged. Here's one right here. I can grab this. Equal and opposite of 10.71. So right there is 200%, about 200% right there. So the first time it became eligible was right over here. I'll blow this up. Now we can really see it. Here it was at 200%. Right here it became eligible. Then I wait for the reversal. I wait for the reversal. I wait for the reversal. Oh, there's the reversal. Okay.
Yep. I'm going into the trade, and then we're profitable the next day.
Yeah.
The next 3 days.
Or with, right. Exactly. There you go. So we entered the trade on this day. And actually, no, it wasn't. Look at that. It went down barely. It went down 0.01%. The next day, it went down dang it, right there. Went down 4.61%. Yeah. So that's what I want you to practice. Okay. This one would have been acceptable because it was like symmetrical here, and then it popped. I love this sharp. See this sharp little reversal? It screamed up, and then bam, slammed down. What makes me a little nervous is if this reversal was up here, like barely reversing. That always makes me a little nervous, but if it slams down, I feel a lot more confident that this is a true reversal. And check this out, it was a true reversal. That was the peak. Ever since then, it's been going down, down, down. Went down 10%. It's still going down at this point. Now, if we, and that trade's over, you don't look at it again. It resumed going up, but look at actually, this is another thing here. Now, this is another peak here. I'm going to tell you something else that will increase and stack the odds in your favor, okay? And I haven't told you this yet. This is new. When you're looking at these trades, the probability of you making the 1.5%, it even gets even higher listen carefully, the very first time it does the 200% move. What that means, if If you look at the entire, this is the entire length of this that we can see. All right, I stretched it maximum. We're looking at the whole time period available. This here is the first time it reaches 200% over here. That's the first time. Do you agree?
Yes, sir.
Okay, that's the first time. It did it again here on this peak. Now, it worked, but in doing this and studying the heck out of these stocks, what I've learned is it hits so reliably on the first PM200. If it gets to a second, this is also a second one, because see, doesn't this still qualify? Technically, this still is a PM200, but it's the second time. And the odds of it dropping and making your profit target reduce. Each time it goes a little bit higher from this original thing. It's a little bit counterintuitive because it's because to me, if it's hitting again and again and again, this stock really wants to go up. Like Facebook, when that stock went up and up and up and up and up and went, 100% in 11 months. There's certain stocks that just are, people want to buy it and they're going to continue to buy it. My point I want to drive home, and you might write this down and circle it. This is important. Get in, look for stocks, first timers. Circle first timers. That's the only stocks I want you to trade, as a matter of fact. That's the only stocks I want you to trade as first timers. So what it would look like as far as real life is if you came across this situation where that peak didn't exist yet, and if this was real time, this would have been a first timer, and it cooperated fine. You got your 1.5%. Do you understand?
Yep.
Okay. That's new information, but I want to drive that home. Okay. Okay. So what I'm going to do, I think this is a good time to close this session here.